Hello, on today's edition of The Final Bar, we'll recap today's market activity. Also, I will share with you in a Level Up segment my technical checklist. What are the steps that I coach junior analysts to follow when they're analyzing charts through a systematic lens? Also, a new segment called Today's Chart List. We're going to use the chart list feature, show you a way to break down intermarket analysis, maybe in a way that you've not seen before. Ladies and gentlemen, this is The Final Bar. Hello everyone, welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks so much for joining us today and every day on our Closing Bell show. This runs every weekday, 4 o'clock Eastern, 1 o'clock Pacific. The goal with The Final Bar is to help you understand what happened today from a technical perspective and most importantly, connect it to the long-term trends. Try to unpack some of those key themes that we're seeing out there chart-wise. Really cool show today. We've got a number of new segments that we're sort of testing out, seeing, and again, trying to draw on some of the questions that you've been asking us, and thanks again for that. We have a segment called Level Up, where we're gonna break down the technical checklist that I use to coach new analysts on how to analyze charts. Had a great question on how to do that, and I thought it would be a nice segment for us. Also, we've been polling you over the last 24, 48 hours about what you're seeing with intermarket analysis, so I'll share the results of that poll and then also go through a chart list that I use to actually break down intermarket analysis. So based on your answers to the question, we'll look at some of the charts together and then maybe at the end draw our own conclusions about what we're seeing. We'll finish off thinking about shifting stocks. Should be a really cool 30 minutes together looking at the charts. Let's get to our market recap. So, you know, today, certainly a bit of distribution. We sort of had the choppiness yesterday, and then today certainly felt like some continuation to the downside. A big step off the cliff here after lunch. Recovery a little bit into the close, but still well below the open and well below yesterday's close. So the S&P finishes down about 38 bips, about 38 basis points, or 0.38%. The Dow about the same. The NASDAQ down a little further, over 0.5%. Again, one of the themes we've talked about a lot in recent weeks and months is the relationship of large to mid to small caps. It's a really interesting relationship to look at. If you look in the middle of the market dashboard, you'll see all three of those together. So the S&P 100, the largest 100 companies essentially in the US, down 0.41%. Mid caps down a little less, 0.36. Small caps down the most, 0.63. And again, one of the things that you would think, again, if this follows the traditional bull market playbook, if you're expecting strength leading into the new year, you'd want to start seeing small caps performing much better than they have. Certainly didn't see that today. I want to get back to sectors and some stock themes, but I did want to show you the chart of the intraday movement in the S&P 500. A lot of times I'm asked about Fibonacci retracements from people that are not technically oriented, strategists, fundamental analysts, portfolio managers, just because it's a little more esoteric, right? It's sort of a step away from trend and momentum. It's more of a mathematical play. It's looking at price relationships. And so it's a little more of a hurdle, I think, for some people to get over mentally. And I like to show them charts like today's movement on the S&P as a reason why you use Fibonacci retracements. If you look at what happened just on today's trading, that's the right fifth of this chart here. We opened down from yesterday. We rallied up a little bit, hit a peak around 10:30 a.m. That's the high that I picked. We then sold off into the, after lunch until about 1:15. That's the low that I picked. And look at how we retraced right back up to about 38.2% before the first major pullback. We then continued on to hit an eventual subsequent peak right at 61.8%, almost to the tick. We came down, hit the 38.2% level, and we sort of finished in the middle there. So anytime you see a big range move, a big move that sort of sets the frame of reference, Fibonacci retracements is all about that frame of reference. And if you take the high and the low, as you start to see the market move between those extremes, a lot of time the Fibonacci retracements give you a really good read on where things are happening. So, really good illustration of where we came right back up to a key Fibonacci level. So, this is obviously, there are a lot of macro themes. A big story was a number of things, but, the main one, thinking about the China trade deal. And I think, the fact that rumors of it going very well or very poorly has the ability to do this sort of thing to your chart. So my point to all of you is pay special attention to the charts, because that's what will help you understand how people are reacting to the big news. This sell-off after lunch is the news. The reaction is where the charts can be really, really helpful to help you understand where we're fitting into the big picture. So let's look at a daily chart of the S&P 500, just to understand how it fits in there. And again, so this is today's trading on the far right. The overall trend still in very good shape, and just as a short-term read, you always want to look where we're at and look left on the chart. The next most obvious support level would be around 30.75, 30.80. That's the lows from beginning of last week and the week before. That's where we found support for a number of periods. That's after the gap up that we had a couple weeks ago at the beginning of November. So that 30.75, 30.80 level is a pretty key one. As long as we remain above there, the primary trend here is still very, very positive. If we would start to break down through there, that's what would tell you, I would think, to start to revisit, start to maybe question the long-term strength of things. Very noticeably, the RSI has now come out of the overbought region with today's sell-off. So with today's distribution, 2 days of closing below the open, the RSI comes down through the overbought region. That on its own, that is one data point, but a pure read on that tells you to expect some short-term weakness, really probably through the end of the week is sort of the general way of thinking of that. But overall, it's for me, I like using RSI as a long-term trend measure. When do you see some divergences, higher highs in price that are not confirmed with a higher high in the RSI? So while this is interesting, I think the next move up and the RSI then is going to be really, really key to help you understand what might be coming afterwards. Let's finish up this market recap looking back at the member dashboard. I just want to touch on some of the sector themes. This was much more of a rotation to beaten down spaces in the market. Energy, the number one sector. It has spent the last couple days here at the bottom. We've had a reversal with energy, then utilities, consumer staples, real estate. So really the more defensive start parts of the market really leading, and energy a beaten down group. So again, this is one day. You don't want to draw too many sweeping conclusions from that, but it's worth noting that there is this, certainly a flight to safety, a flight to more defensive part of the equity universe. And subsequent periods, if this becomes a trend, if you start to see utilities recover, and again, they are still a long way from looking especially attractive, but you start to see that recover, I think that's where you can expect that things are getting better overall. So that is our market recap for today. Again, a little distribution. Again, overall, the primary trend's still in pretty good shape. We're going to get to some individual sort of industry and stock themes a little later in the show for shifting stocks, so sit tight for that. Second thing I wanted to share with you was a new segment we have called Level Up. We've done this a couple times, and again, the idea of leveling up is to upgrade your use of StockCharts.com to come up with ways that you can improve on how you're looking at things. And I wanted to share with you a technical checklist. One of the questions we actually got yesterday, I'd mentioned in presentations and on the air before about a technical checklist that I follow, the steps that I like to take to confirm that the chart is doing a certain set of things, that I'm drawing the right conclusions. And I was asked what that checklist was, and I thought it'd be a perfect segment to share with you my technical checklist. And again, I will qualify what I'm about to show you by saying this does not necessarily have to be your checklist. You are welcome to generously borrow mine and evolve it, tweak it into your own, but certainly make it your own. This one works for me because it lines up very well with how I'm trying to look at stocks, how I'm trying to win the game. You want a checklist that's helping you answer the questions you're trying to answer. So, think of that. This is not the answer. Unfortunately, this is what I found over a couple years of looking at charts, what I found to be helpful. So when I am coaching new analysts or when I've taught technical analysis at the college level, I have people answer these questions in writing, actually write out the answers to it. I will show you what they are. I will explain why it's important to write them down. Then we'll look at an example together, hopefully answer some of these questions. So the first question, the first step is what I call Dow Theory. Is this chart in an uptrend or downtrend? Because until you answer that, everything else, I would argue, is meaningless. And if you think about it, as you get further and further on in your technical analysis experience, it's very easy to skip this very crucial first step, which is the thing going up or down? You have to do that. And again, the idea of Dow Theory is looking at highs and lows. Is the stock or the market making higher highs, making lower lows? And that question feeds and I think contributes to the remaining questions. The second one, what are any key trend lines that you can draw, and where is price relative to those trend lines? What can they tell you about any potential reversal spots? The third step is moving averages. What are the key moving averages? Where is price relative to the moving averages? Are the moving averages sloping upwards or downwards? Miss Schneider, who we had on the show down at the Traders Expo, and we'll have on hopefully again very, very soon, does a really good job in her book talking about using moving averages as more of a system of bucketing stocks, which I really, really liked. The fourth step for me is pattern. Are there any key technical patterns, chart patterns that you could use analyzing the charts? Triangles, flags, head and shoulders, those kinds of things. Number 5, where are we at relative to key support and resistance levels? We've always talked about starting with the final bar, starting with the current price, going to the left and seeing what are the key levels you want to be aware of. 6th is confirmation, and I think of confirmation as any derivative of price or volume, something that would appear in a panel below the price. So on balance volume, RSI, MACD, ADX, anything that's going to derive from price and help you qualify what you're seeing. Price is number one most important, but can I confirm that with any sort of signal, a divergence, for example? And then finally, number 7 for me, especially when I'm looking at stocks, is relative strength. A lot of times equity investors get caught with a great analysis of a particular chart, but the problem is they're not looking at the right chart in the first place. It's all about the actionable, tradable charts today. So relative strength helps you understand the movements of this stock versus all the other stocks you could be looking at. These are the 7 steps that I coach people to do, and when I'm thinking of it at the college level, we have a whole class just on Dow Theory and understanding why trend is important, why the market has memory, how the market trends, what that means for momentum implications and investor behavior, but then we define uptrends and downtrends. And at the end, you actually have to answer each of these questions in writing. Then down here at the bottom, you have earned the right to tell me whether you're bullish or bearish on a particular chart. So that is my checklist. I'm going to show you, first I want to just mention why it's important to write it down. So what happens as an investor, as an analyst, the more you look at charts is you start to internalize your checklist, which is fine. And it's good. And the best analysts, the most successful analysts that I've managed and that I've known over the years have a really good, internal checklist that they look at when they're following charts. But as you're getting started, you really want to write them down. And there are a couple things you can do. I would encourage you to write them down longhand because there's something your brain does when you're actually writing pen on paper as a way to manage your list. But you can also use tools like Excel, websites like Asana or something like that, checklist websites to help you manage it. But do some way that you're meticulously doing it, just like you're pre-flighting an airplane. Then you're going to minimize human error, hopefully. So let's look at this chart of Home Depot to wrap up this segment. Look at this chart of Home Depot together, answer those 7 questions, and you'll see why the checklist has meaning. Number 1 is Dow Theory. Is this chart in an uptrend or downtrend? And use that by looking at highs and lows. So on this time frame, and again, we're just doing it simplistically on one price, is it an uptrend or downtrend? Overall, it has been in an uptrend of higher highs and higher lows, but in the last couple days, it has broken down through the most recent swing low. So at this point, I would say Dow Theory neutral because I'm waiting to see the next subsequent high if it's higher or lower. So at this point, neutral. Second, any trend lines. I would probably draw this trend line here connecting the low from August to October. We've now broken down through that trend line, so the trend line analysis would tell me we've rotated lower. Where are we at relative to key moving averages? The moving averages are relatively flat. We have broken down through the 50-day, which is a short-term sign of weakness. The 200-day is really the key one, so overall, still okay from a long-term perspective. Any patterns? I don't think so. Maybe a double, triple top here that we've pulled off of, but nothing that really comes to mind. Support and resistance, huge resistance around 238. That's the highs from the last couple weeks. We have now broken down through support around 230, now testing support around 222, and I would want to see follow through the rest of the week. Confirmation, we're nearing an oversold condition, and relative strength, we are at new relative lows for the last couple months, nearing a 3-month low. I have now earned the right to say whether I'm bullish or bearish on that chart because of answering all of those questions. What is my quick answer? Wow, I'm decidedly neutral on something like Home Depot because it's been in such great long-term trend. I'm seeing short-term weakness, but long-term still pretty positive. So I'm looking to see what sort of rally recovery we have from this recent sell-off. That is the Level Up segment, walking you through my technical checklist. And again, I would qualify it by saying your checklist should and can look different from mine. So spend some time thinking of what your own steps would be. We're going to take a brief commercial break. We're going to be back with the answers you had for a poll on a market outlook and also unveil one of my chart lists I think you should be using. We'll be back in 30 seconds. guys, thanks so much for joining us. Welcome back to the show. I'm Dave Keller here at StockCharts.com. Thanks for joining us on The Final Bar. Keep your questions coming to us via email, thefinalbar@StockCharts.com, if you would. This next segment is actually called Today's Chart List. One of the things that we talked about was incorporating different chart lists that I find helpful in sort of illustrating how the chart list feature I think can be so beneficial. But to introduce that topic, we actually had a poll that we've been running on screen. So remember, at all times during StockCharts TV broadcasts, we'll often have a poll on the right side of the screen. Answer them anytime you can. It's a great way to sort of interact with us here in Redmond and also give us some cool things to talk about on air. So we asked you, which asset class do you think will perform the best through the end of this year? 3 out of 4 of you said U.S. stocks in the form of the spiders. Next was EFA global stocks, 11%, followed by gold, 9%, and then bonds, 7%. So out of all of you, only 16% were on the more defensive side. 85% of respondents basically said to own stocks, and it was just whether U.S. or global. I think that's really interesting. I'm going to show you the chart list that I use to actually, what I would use to answer that question, and then we'll talk a little bit about what you guys said. And thanks again so much, everyone, for answering that poll question. On your dashboard page, if you go toward the bottom, you have the chart lists that you have created or that have been shared with you. And this is a great way to organize things. I start them all with a number. That was an Arthur Hill trick to sort of organize things. And I'm going to go down to this one on intermarket. I'm sorry, this one actually on global ETFs daily, this one right here. And what this does is it actually shows me, if I go to a candle glance, this is showing me, looking at US versus global stocks, how I should think about that. So many of you said US stocks, which is the first chart in the upper left. This is the spiders. I then have EFA, I then have emerging markets, and then I have frontier markets. And I've ordered these in a specific way. If I show you the summary, the edit page, I've ordered them in number order to start with sort of the broad global regions and then get into some of the individual countries. So this chart list in particular hits on the key global ETFs. So the question we asked was on US versus global versus non-equity asset classes. The way that I would think about those first couple is by looking right here in the upper left. What is the US doing? What is EFA doing? EM, frontier markets. And overall, you can see how the US market has been the strongest just visually based on the relationship to the moving averages, certainly based on the pullback in the last couple weeks as EFA has sold off a little bit as the US has remained strong. And then look how EM, there's this real divergence of the three. So what I like to do here is look at these broad, global regions, then look at some of the individual countries. And you'll notice countries like Canada that have actually done very, very well. Looks very similar to the chart of the S&P 500, whereas something like Brazil has been beaten down. This is in EM, very commodity oriented. So the weakness here mirrors the weakness that we've seen in the commodity complex. Much, much less attractive from a technical perspective versus others. But you also see things like Taiwan and China and see how they relate to one another from a visual perspective. So the way that I did this was actually setting up all of these in number order, starting with the broad list and then going down. I then finish with a couple really key charts. I start with the Earth. This is the World ETF, the MSCI World ETF. This is an ETF that covers global stocks, US and non-US. So overall, what are stocks doing? On the final one, I'm actually looking at some of these regions relative to one another. Here I can really see how the US is rallying. I can see how EFA has sort of flattened to down a little bit. EM has really sold off, while frontier markets have actually held up pretty well. It's more of an obscure list of countries. So the reason why I'm showing this in a chart list segment is to remind you that the way that you order the charts into your chart list can be really, really helpful. I use StockCharts as a series of Chrome tabs. That's how I've learned to use this platform really, really well. And for me, my chart lists always start with some broad things at the top. I then get into the weeds, the details, and then at the end I have some summary charts that will help me compare. So it's what are the big picture charts? What are the individual details in case I want to get into more specific detail? And then what are ways I can sort of compare all of these things to one another and make sure I'm looking at the right charts? So if I look, the specific question that we asked you was on intermarket analysis, was where you want to be in the US stocks versus versus bonds versus gold in the commodity space. So one of the other chart lists I use is this one called intermarket analysis, and I use it in exactly the same way. Here's stocks, here's commodities. I'm then looking at interest rates, currencies, getting into commodities there, and then finishing off with a chart that shows stocks versus bonds versus oil and gold and the dollar. And this final chart is the one that I would probably be looking at to best answer that question. And when you do this, you can see how stocks have been in a very good place, started to roll over a little bit, and this is a little bit old to show how this would have looked sort of September leading into the beginning of October. But you can see how the rollover in stocks leading into the beginning of the month of October was completely different from bonds rallying. So that divergence, that differentiation between different asset classes really jumps off the page when you're able to look at some of the charts together. So that is our segment called Today's Chart List. And again, if you're not using the chart list feature, I would argue you're missing out on one of the great benefits of the StockCharts platform. As we go on and we bring this segment back at different times, we're going to share with you some of the other chart lists that I use. And again, the chart lists are basically the routines that I've built to go through a series of charts. And again, that's the way as an analyst, as an investor, I think you can maximize the benefit of technical analysis for you in your portfolios. Our next segment is called Shifting Stocks. This is a regular segment that we like to feature where we break down some of the equity and industry themes that we're seeing. A lot of times what I like to do to drive this is using a series of summary reports that we have on the platform. Number one, looking at industry movements. Number two, looking at the scooter reports and trying to see what sort of themes we can tease out by thinking about chart movements. So first off, we're going to go here on my member dashboard. This is a Dow Industries list. So this is looking at the 100-odd Dow industry groups, pretty specific lists of names. The way that I've organized this is by sector and then by industry. And this is sorting it on a couple different things. We're starting on just what's moved today. So what's noteworthy at the beginning of the show, when we were talking about a market recap, talked about more of a rotation to defensive parts of the markets today. And we're seeing that certainly looking at the industry level. So the number one industry was in energy. Energy is the number one sector today. Oil, equipment, and services, the number one industry group. Again, looking at the little preview chart, this is not the best chart out there anywhere. It's just up one day in a big way. But overall, the trend's still sort of choppy. We've arguably put in a higher low, which I think is really noteworthy. If you look, and let's jump into the chart here a little bit because I really like this example here. If you look, this is just today's trading getting back above the 50-day, which is interesting, but we talked about trend lines in our checklist. Look at this trend line from the October low to the subsequent low we had at the end of October. That lines up really well with the low we had yesterday, and now we have sort of this little uptrend that we've tracked of higher highs and higher lows. Overall, the group is starting to look constructive, and as long as we stay above that trend line support, might be an interesting group to actually dig into a little bit. Again, that's not a tradable index, that's more characterizing those stocks. So I look at some of the individual charts to figure it out. Distillers and vintners have been one of the worst groups consistently. Look at the downtrend that we had up until the last couple days. We had a nice bullish candle yesterday, and that was a follow-through day today to the upside, now breaking to a new swing high. So certainly seems to be more constructive. Tobacco has been, a bit of a struggle, but you can see how today we're recovering a little bit from yesterday's sell-off. And then we're getting into something like utilities. Look at water. That again has been one of the beaten down sectors. Look at the relative underperformance, just starting to slope higher, just starting to show signs of life. So again, those sort of industry looks are good for a short-term read. Always look at the chart to see what the long-term trend is and see if that's confirmational or not. Looking at the groups that are down the most today to sort of tease out some themes, tires, which is in consumer staples, paper stocks, it's actually gapped down today, breaking down through support at 140. So it's a group that if you are sort of thinking of on the long side, certainly revisit those and think about stop levels and where they want to be, where you might want those to be. Automobiles are a really interesting group. This is something that had rallied really nicely, broken above resistance from over the summer, really felt like it was on the way to higher highs, but now we had a big down day about a week and a half ago, another big down day, sort of the dead cat bounce over the last couple days. Now follow through to the downside. RSI down 50, which is more neutral. Relative strength starting to slope down a bit, so it's certainly brought the recovery of that group into question. That's autos with a couple stocks you're probably familiar with. Then the next one is actually apparel retailers. We're going to look at this next group. Same story, right? This is a group that actually had broken above resistance, now coming back down, a lower low, and now subsequent breakdown today. So a couple groups that actually had been showing signs of life, starting to break down through some key support levels. Looking at individual stocks, I'd encourage you to look at some of these names. Airlines we talked about just recently as a group that was potentially recovering, being part of that, transports going higher. But Delta Airlines, one of the worst stocks today in the large cap universe. scooter ranking down pretty significantly. On the upside, you have things like ConocoPhillips. Talk about stocks that have not been in the scooter, most improved list, something like COP. This is a chart that has been, one of the more beaten down names. This has been in the energy space that's been sort of a snoozer. But look at how this is slowly and sort of quietly recovered, now testing the 200-day from below again. If it can reclaim that 200-day with some follow through, do what it was unable to do back in September, might be a really interesting place to start to think about. The number one scooter improved name I want to show you today is Hologic. This is in the healthcare space. Healthcare has been consistently sort of at the top of the list of sector movements intraday. This is up over 4% on a down day in the market. So certainly be paying attention to stocks like that are accelerating in a period of overall market weakness or skepticism. So that is our segment on shifting stocks. Again, so many things. When you look at individual names, you could fill hours looking at some of those charts. I'd encourage you to dig a little deeper into those scooter charts on your own time. We are going to finish today's broadcast, though, with the 3 and 3. These are 3 charts that if you're not looking at yet, you certainly should be after we talk about them today. The first one is looking at a Dow group called the fixed line telecommunications. This is the old telecom sector, so AT&T, Verizon, CenturyLink are the 3 S&P names that are in that group, and then it gets into a lot of small mid-cap, sort of boring telecom stocks. These are sort of the traditional Ma Bell type of names. But with AT&T and Verizon, you have a lot of 5G exposure and other themes, cable and so forth. What's interesting about this group, stocks like AT&T have been on a killer move on a total return basis on strong periods of outperformance, but the last 2 days have certainly been distributive. Yesterday, we tested the 50-day. Today, we followed through. What's interesting and why this is an interesting group to watch is because we have what's called a doji candle, the open and close right about at the same level with a high, heavy shadow or a long shadow, a range between high and low. The RSI's pulled back to the traditional point where it tends to bottom in a bullish phase. So it's sort of the line in the sand, testing price support, testing RSI support. If the trend is going to continue, boy, today's the day you'd want to jump in potentially and ride the next leg higher. So tomorrow, I think, is a really key follow-through day for that group. The second chart for the 3 and 3 is the tobacco index. These are names you're probably familiar with, Altria and so forth. And these are stocks that have been very much off people's radar because they've been so beaten down. And the first half of this year was an absolute disaster leading into mid-September. New price lows, new relative lows becoming oversold and continuing lower. But look at how we've now started to recover. We've now reclaimed the 50-day, now reclaimed the 200-day. Yesterday was back below, but today's trading, we've gone back above the 200-day moving average. So if this can hold, and if this sort of group remains above here, certainly more of a defensive play, that might lead the relative strength to go to new highs. And if we get a new 3-month high in relative strength, I think it might be really worth paying attention to. The third of the 3 and 3 is growth versus value. There are a number of ways that we look at this. And if you've not seen the Mindful Investor chart list, there's 2 charts. This is one of them. This is the growth versus value ETFs, IWF versus IWD. The ratio has gone to a new swing high, which is why it jumped on my radar, back above the high from October. This theme of rotating more towards value-oriented names, I think, is a theme that will most likely surface, if not through the end of this year and then certainly into next year. It's been so out of favor. And if you look at the pure growth versus pure value indexes, they're a little less positive, but this key ETF ratio has broken to new highs, so worth paying attention to. See if value will come back in a meaningful way. That is our show for today on a Wednesday afternoon. Thank you guys so much for joining us today and every day. Please keep your questions and your feedback coming. Had a couple really good questions recently, which we're going to share in our mailbag segment tomorrow and Friday. So the final bar at StockCharts.com is the best way to get questions our way. Also hit us on Twitter at FinalBarSCTV. Check out our YouTube channel. We have all our old interviews, all our old shows. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Have a good night.